Man, what a rough day for the stock market today, guys. Let's dig into it. We had the Russell 2000 close down about 1%. The Nasdaq went down almost 2%. Unbelievable red day for the tech stocks out there, guys. And we had the S&P 500 down 1.4% as the Dow went down 1.3% and the VIX went up almost 11% on the day. So let's dive into it. We're going to break down the markets in this video like we always do, and we're going to talk about some earnings reports that came out today. So if you all find value, hit that like button, subscribe, and make sure to get up to 15 stocks for Moo, each up to $2,000. Link down below, guys. And full disclosure, all those links down below are affiliate links. I appreciate you all as always. And now let's dive into it. So it's clear to me that the S&P 500 here, looking at SPY, is going down to this 180 SMA on the 4-hour chart. It's pretty clear as day to me at this point in time. You guys can see we ended up dumping a good amount of the day today. We saw a little bit of a fake out rally in the middle of the day where SPY went from 408 up to about 413, and at about 2:30, 2:45 heading into power hour, this thing fell off a cliff, and now it's down even more in the aftermarket hours. In fact, in the aftermarket session, we took out the lows not only from right before the close, but also from earlier this morning. You guys can see right here, SPY this morning held about 408.50, and then it saw that big rally to about $413. So this is not looking good for the bulls in the very short term. And on the 5-day chart, you guys can see we're breaking supports from a couple days ago as well. But at the end of the day, guys, it's not that bad looking at the 4-hour chart. If I zoom in a little bit here, it's not that bad. It looks like we're just pulling back to about 402, 403. Now, if we broke under 400, that would be bad for the bulls. That'd be bad for the bulls. But the fact that we're still above the 180 SMA, it looks like the bulls are still overall in charge when it comes to the last, month, couple months, 2-3 months of data here, of price action that you guys see. And the same thing pretty much applies to Triple Q. You guys can see here, it got pretty overbought. It looks like we triple topped here at about 312. Now we're starting to fall under the 50 SMA. We're starting to creep under this wedge. And it looks like to me it's potentially going down to the 180 SMA. It could be anywhere from 290, 295. And that's going to be the critical test. Now, if the bulls fail to hold 290, it falls under 290, that's obviously going to be where the momentum slowly starts to shift to the bears' favor. And we'll see how tomorrow goes. Of course, Monday, it's President's Day. Markets are closed, so next week's going to be a short one. So we'll see how tomorrow is going to be heading into a long weekend. I don't know. Is it going to be another red day? It looks like the futures are down right now, and, everything's down after the bell as well. So is that setting us up for another red day? Time will tell, guys. Of course, let me know your thoughts in the comments down below. I love it when you guys chime in and let me know what's on your mind. So, yeah, today was the day of SQQQ. This thing went up 5.7%, which you guys know SQQQ goes up whenever Triple Q goes down. It's essentially a 3x bear ETF. So today was the day of SQQQ. This is up even more after the bell, and this is going to be on my radar for sure heading into tomorrow, especially if it starts to take out 37.50. This thing could end up flying from that point. So I'm going to set my alert on SQQQ at $37, and we'll see where it ends up going from there. So with that being said, guys, let's talk about some earnings. We had Shake Shack today. SHAK is the ticker symbol, and this thing went down 3.4% on the day. You guys can see it's right at the, it was at the top of this channel. You can see we hit about $63, $64 earlier today. If you pull the 1 day up, you'll see in the pre-market we hit, or actually no, they reported after the bell yesterday. That's my bad, guys. It hit $64.50, and today in the morning it fell all the way to $53. It dropped 16%. You guys can see that's a pretty big drop. Then we ended up consolidating in the mid-high 50s for the rest of the day. So Shake Shack looks very vulnerable to a drop right here, in my opinion, based on the chart. And when it comes to their earnings, let's break it down. They did adjusted EPS of -6 versus the -11 estimated on revenue of $238.53 million versus the $238.23 million estimated. So they beat EPS on an adjusted basis, and they beat on revenue ever so slightly. In Q4, same Shack sales, I like the way they word that, same Shack sales. That's a tongue twister. Say that 3 times in a row, guys. Same Shack sales. Same Shack. Their Q4 same Shack sales were up 5.1%, not bad. And Q4 system-wide sales of $364 million, that's up 15.8%. Compared to 2021. So not bad for Shake Shack. Maybe, and the reason why the stock's falling, selling off, maybe it just got a bit ahead of itself heading into earnings. You guys can see this was at $40, $41 at the beginning of 2023, and it got all the way to 64, guys. That's a 60% move in the span of a month and a half. Yeah, a little too aggressive of a move in my opinion. So earnings came out. It didn't, the earnings weren't great enough to continue this rally. Now we're selling the news pretty much, and this might come down a little bit more, lower 50s. Heck, maybe it comes into the high 40s. We shall see. So that's Shake Shack. We also have DoorDash, which a lot of people probably use DoorDash to get their Shake Shack. Probably. I've never done it, but maybe one of you guys have done that. And DoorDash today reported numbers, and the stock closed at $66. And here after the bell, guess what, guys? It went up all the way to 77, and now it's cooling off at about $70. So when it went to 77, DoorDash was up 15%, and now at $70, it is up about 5% after the bell. Not bad. So they did Q4 EPS of negative $1.65 versus negative 45 cents year over year on revenue of $1.18 billion versus $1.77 billion estimated. So they beat revenue. EPS is actually down year over year, which isn't that great of a sign, but this company's really not focusing on profitability. It looks like they see full year 2023 adjusted EBITDA of $500 million to $800 million. That's a pretty wide range there. And they see marketplace 2023 GOV of $60 to $63 billion. What's GOV again? Crap, I forget what that means. But they see Q1 marketplace GOV, or is that gross order volume? Yeah, probably, of $15.1 to $15.5 billion. So DoorDash, if I look at the chart here, guys, on the 4-hour time frame, we have an inverse head and shoulders, clear as day. You guys see that left shoulder here, the head, the right shoulder, that pretty much played out. And now we're actually starting to take out the highs from the middle of November. With this move, we're breaking out of that point. So this looks good. The bulls are starting to really, come alive here on the stock. It's at a multi-month high. And the fact that we're pulling back here a little bit from that initial 77 pop now to the 70s, low 70s, let's see if we can hold support here, because you guys can see 68-ish, 66, 68 to 70. That was resistance for months. Let's see if we can now hold that as support. We also had Paramount report, guys. Let's pull that up. PARA is the ticker, and they went down 4% on the day. Now, after the bell, this stock is actually, no, they reported in the morning. So this thing, for some reason, I thought they were after the bell. But they reported this morning, and they tanked after the report. You guys can see here, and it pretty much coasted all day, but still, it wasn't good enough of a day to recover that loss. So it went down 4%. And Paramount, well, they lost, or they didn't lose money, but they missed, rather, on the estimate. 8 cents EPS versus the 24-cent estimate that missed on revenue of $8.13 billion versus $8.16. So they missed EPS and revenue. And Paramount Plus added 9.9 million subscribers on the quarter. Well, they just lost one the other day, actually. I made a video on my second channel, Stocks Talks Money. Make sure to go check it out. Link down below. You guys got to go check it out. More of a personal finance, general finance video. I just actually made this channel, rather. I just made a video today going over how you can save money in 2023. And one of the reasons I talked about, or ways, methods, was to cancel the amount of streaming services you have, or the ones that you don't use. Because let's be honest, 10 years ago, Netflix was like the only one out, and people just had a Netflix account, and that's it. But nowadays, there's competitors everywhere you look. There's like 15 streaming services, and a lot of people, myself included, me and my fiance included, they have way too many streaming services where they're not using half of them. And this is one that I just cut. It was $9.99 a month. Wasn't using it, so I'm like, why am I paying for this? Cut it out. And again, on that channel, we talked about, on the video that came out today on Stocks Talks Money, we talked about a bunch of other ways that you can save money, right? So go check out that channel, link down below, or just go to YouTube, type in Stocks Talks Money. You'll like it. It's a little bit of a different channel than this one, a lot different. I mean, we don't really talk stocks on that channel. So if you want to check it out, go check it out, Stocks Talks Money. And if you want to save some money, guys, you got to cut out some of these streaming services that you're not using. And a lot of people sign up. I talked about this in that video. They sign up for free trials of things, and then they forget it's a free trial. Then they end up paying for a couple months before they realize, oh, crap, I've been paying for a couple months on something that I'm not using. You guys know what I mean? So Paramount, it looks like despite me canceling it, they still added 9.9 million people on the quarter, right? And this thing is reversing, and I'm not going to play it until we could see a break past the double top high at about $25. So I'm going to set my alert at 25, markers that were above, and we'll see what it ends up doing from that point. We also had Crocs report, guys, and this stock ended up tearing it up today. It went up 4.4% on the day, and after the bell, or in the morning rather, it shot up all the way to 143.50. And you guys can see when they reported earnings in the morning, this thing went up even more, right? So they did, or that's when it initially shot up, and then it went up even more as the markets opened. Crocs did EPS of 265 versus 226, estimated on revenue of 945.16 million versus the 939.26 million estimated. So they beat EPS by a nice margin there, and they beat revenue, and they see adjusted EPS of 206 to 219 versus the 202 estimate on revenues. And they see revenues up 27 to 30%. Not too bad there for Crocs, guys. And this is one that's done very well. I mean, look at the stock the past couple months, guys. It has gone from $46 back in July to now $130. That is insane. 170% of a move in the past couple months. This has got to be one of the best performing stocks out there. Of course, maybe there's definitely penny stocks out there that have gone up thousands of percent. But looking at stocks out there in general, guys, these days, some of them are down a good amount the past couple months. A lot of them have recovered, but this one's done very well, 170%. I mean, geez Louise, guys. So Crocs is one looking pretty good. DraftKings is also looking good after the bell here. This is up about $1 after the bell, more like 80 cents. Initially, it shot up to about 19.45. You guys can see here that was a 9% move. Now it's at about 18.60. So DraftKings did negative 53 cents on the quarter, so they lost money. Not a surprise on that negative 59-cent estimate. So they beat on that, and they beat on revenue. It looks like $855 million versus $800 million estimated, and they raised their full year 23 guidance, which is good on revenue here, from 2.8 to 3 billion originally to now 2.85 to 3.05 versus the 2.95 billion estimate. So that's pretty good. You guys know DraftKings is, you know what they do. I mean, they're all over the place. One bad thing about this business is the sheer amount of marketing spend it takes to gain new customers and obviously to keep them. I mean, you guys see all of these different competitors nowadays, and that's the problem with these, what would you call them? The sports, not sports betting. I mean, that's part of the business, but you guys know what I mean? These online sports books, right? Online casinos, whatever. There's so much competition out there, and a lot of people jump from, app to app to app. And they do because there's offers on all these apps to try and gain these customers. You opt into these certain bets and you do this, you do that, you get a free bet, 50% profit bonus, this, that, the third. And you jump from it's kind of like streaming services, right? People jump from streaming service to streaming service. Same thing here with, DraftKings. So it's not my favorite business model, but it's not my least favorite. It's kind of like, I used to hold the stock, sold out of it a long time ago, and I'm not looking at it again. But DraftKings, they reported a decent quarter, so kudos to them. Applied Materials also reported they did EPS of $2.03 versus $1.93. That beat on revenue of $6.74 billion versus $6.69, which also beat. And you guys can see here it is looking pretty decent on the chart, and it is pretty much. It went down 3.5 on the day, percentage points. Now it's up a little bit, but it looks pretty choppy here after the bell. So let's see what direction this ends up picking. Do we take out 120? Or do we end up dumping under 110, which will not be good for the bulls? So I'm going to set my alert at $120 here. Mark is at or above. And the last stock for the video, guys, is Hasbro, which this chart, I'm not going to lie, looks the worst out of all of the stocks that we've talked about today. But they reported earnings, guys, and they ended up doing adjusted EPS of $1.31 versus $1.29, estimated on revenue of $1.67 billion versus the $1.68. So they barely beat EPS. Barely missed on revenue, and the stock went down pretty much all day. It had an initial pop in the morning after the numbers came out, and it's been drifting down ever since. And I'm not going to play this thing, guys, until it starts showing me higher highs, higher lows out of this $67 resistance, which you guys can see. This has been resistance for quite some time. So with that being said, guys, I'm going to wrap up the video. Markets are not looking so great today. They were not looking so great today, but it doesn't seem like it's the end of the world yet. So what do you guys think? Let me know in the comments. Hit that like button. Don't forget to check out my second channel, Stocks Talks Money. Feel free to subscribe. And don't forget to also, on top of that, get up to 15 stocks for Mumu, each up to $2,000 with at least a $100 deposit, linked right down below. And you could also get up to 12 stocks from Webull with any amount deposited, also linked down below. And guess what? Patreon's also down below, the Seeking Alpha link. Check all those links out, guys. I appreciate you all. As always, peace out.